Guys, welcome. Another week 4 of the Sundays. And I did say I want to be going live a lot more. That's going to be happening. I go back to work this week. This is my last Sunday of summer, but things to accomplish in this live stream. If you're kind of curious, like what we're going to be doing, guys, jump in the chat if you have any questions. I'm going to take a voicemail question. I added a voicemail link, just kind of like how I do with the podcast with JJ Buckner. So there will now be there'll be a voicemail link. So if you want to leave a voicemail, whenever I get one, I'll pretty much go live that day. So you can pretty much assure yourself, other than Wednesdays when I go live with JJ, if you leave me a voicemail, I'll get to that question. I've also started collecting some awesome questions from inside the Discord and in my comments section as well. So I'm going to touch upon a really good question that I got from my video that I released with all my option plays this week. And some of I made a major typo and somebody actually caught it, which is awesome. And they didn't catch it. They were just like, that didn't really make sense according to kind of what you say. So I want to make sure that, we're on the same page. So I'm going to talk about that. And then also I got crushed on a cash secure put. So I will be bag holding essentially, but I'm going to show that cash secure put from start to finish and talk about, the power of rolling and also the power of net premium when we look at things like the cash secure put. All right. My goal too, if the audio is right, as you guys know, I've been working on that for a little bit. I will hopefully be taking clips of this from questions and things like that and putting it on the main channel. So I want the main channel to be a lot more interactive with the group, just to try that out, see what happens. Have this be kind of the live show, if you will, and then have that be my regular videos as well as clips from that. So before we dive into the first live stream, I did get one voicemail question today. I'm going to play that voicemail for you guys, and then I'm going to answer it, just like JJ and I do on the live stream. And then after that, we'll hop into the Tattoo Chef cash secure put. And then, we'll talk about some other things. The comment from that video as far as my ABBV play and why I took a loss. And that's going to include when we roll for a loss, so when we're going to buy to close and roll at a loss, when would you want to roll for a loss and take a loss on a covered call, things like that. The investing house is in the chat. Thanks so much for coming in. Have you seen the Rosencrantz? And no, I do not. What? Oh, physics jokes. The investing house jam session on the guitar. One of these days I will get the guitar, and I definitely have to have more than a couple Bud Lights. It's Sunday, so I've definitely had a number of Bud Lights. When I play this first voicemail, I think I set it up where you guys can hear my audio from my computer. If I'm sitting here just staring at you and you can't hear it, let me know and I'll reconfigure some things around. But I think you should be able to understand it. You should be able to hear it. So let me play that first. This question comes in, and it has to do with, how we're going to diversify our money and our funds amongst different options plays. Essentially, should we have one option play? Should we have 5 stocks, 10 stocks? How many stocks should we be doing this with? So the investing house, I will definitely get to that question. But let's listen to this question from Chris. Like I said, guys, hopefully you should be able to hear it. If you can't, please just let me know. Oh, restart over. Let me know if you guys can hear it.
Hey Brad, my name's Chris. I've been watching your channel for about 2 months. I love what you do. Thank you for all the advice, the tips, the tricks. I really appreciate it. Something that I've been wondering though is I have about $5,000 invested in the wheel strategy, and I'm actually upping it to a total of $20,000 this week. But with the $5,000, I've been just between two different stocks. At 20, I was wondering how diverse.
All right, so I was muted. You guys could not hear that at all? Couldn't hear the second time either? Maybe one last try. If someone could just, if well, you can hear me, right?
Hey Brad,
You
my
can hear
name's
me
Chris.
or no?
I've been watching your channel for about 2 months. I love what you do. Thank you for all the advice, the tips, the tricks. I really appreciate it. Something that I've been wondering though is I have about $5,000 invested in the wheel strategy.
Okay. So essentially, I'll play it and then I'll let you know exactly what he's saying. I'll turn it up a little bit. Now we can get both. Okay. So now that I figured that out, I'm gonna raise the audio. I think it was a little quiet. The voicemail itself is a little choppy, but now I'll tell you exactly what he said. What we're gonna be listening and what you're gonna hear him say is that he has about $5,000 invested into the wheel strategy among two stocks, and he's going to be upping that to, I think he says $20,000. And he wants to know if he should be building that among many stocks, one stock, two stocks, three stocks. So let's try that again now. I have the audio up. Thank you guys for your patience. First week I'm doing this, so hopefully I'll have it, I'll get it good. Let's try this again.
Hey Brad, my name's Chris. I've been watching your channel for about 2 months. I love what you do. Thank you for all the advice, the tips, the tricks. I really appreciate it. Something that I've been wondering though is I have about $5,000 invested in the wheel strategy, and I'm actually upping it to a total of $20,000 this week. But with the $5,000, I've been just between two different stocks. At 20, I was wondering how diverse you'd recommend, because should I have 10 and 10 in two different stocks, or is that going to be limiting myself too much, and I should spread it out into maybe 6 or 7 stocks that I'm wheeling at the same time? Just curious. Thanks for any advice, and continue to keep up the good work.
All right, guys. So hopefully that came in. Like I said, the audio on his end, it wasn't great. I had to listen to it a few times. So to reiterate what Chris said, and I'm going to give my opinion on that, is he has $5,000 and he's wheeling with two stocks. He's upping it to 20. He's not sure how he should allocate that other 20. Now, really how I feel about that is me speaking from personal opinion. Or a personal experience. I pretty much started with one and then I went to another. So I was doing one at a time, but I didn't have a lump sum to really dump into it. There's a couple different strategies that Chris can take here. If he has a list of 5 or 10 stocks that he wants to do the wheel with already, he can dive in and diversify amongst many different stocks. I mean, if you had a portfolio with 50, 60, 70,000 stocks in it, whatever you want to do, you can wheel with every single one of those. What I would not do, Chris, is I would not wheel with a lot of stocks just so you can say you have a lot of stocks. I think you'd be better off taking all of that money and writing multiple contracts on the two stocks that you're already doing and you already know well. Let's say, for example, you have that 5 and that allows you to buy 100 shares. Well, now you have this other 20, you can go and you can buy 300-400 shares. And now you can do the wheel. You can collect more premium because you can write more contracts with the stocks that you know. The point being, I think it's more important to know the stocks, be comfortable in the stocks you're going to trade the wheel with. Know that these are stocks that you need to be able to hold on to, which we're going to see in 1 second with my tattoo chef call. You need to understand the stocks. The premium really means nothing, and the wheel really means nothing, and how many stocks you do it with. I had massive success doing the wheel with just 1 or 2 stocks with a couple hundred shares. And I know many people inside my Discord that have done the same. They have 1,000 shares. You can write 10 contracts. Well, if you're getting $10 premium a contract, that's $100 every single time. Excuse me. So it all depends, Chris, on how much research you've done. Long story short, if you got a bunch of different stocks that you've been waiting to do the wheel on and now you have the funds to do so, I have no problem diversifying amongst many different stocks and doing the wheel. If you only know about those 2 stocks, then maybe add one more, but maybe add some more shares of that and, do it with those 2 as you do due diligence. And maybe, if you had 400 shares and you did one covered call and it got assigned, well, maybe instead of cash or putting that and keeping in that one stock, maybe you would diversify away from it that way. It's all about the due diligence. And at the end of the day, it's all about the stock that you want to hold, the stock that you're going to need to hold for a long time. And that's really that. So Chris, thank you so much for the voicemail. If you guys want to leave a voicemail, I pin the link at the top of the comments section. I also have it in the description of this as well. And like I said, whenever I get one, I'll throw it in there. And if you're watching the Average Money podcast with JJ Buckner, who's also in the house tonight, as you just heard, like sometimes our audio isn't great and we didn't blow off your voicemail. There was probably just some audio on the back end, but that's something I'll work on. Thank you so much for helping me out with that. And like I said, I'll go back to the chat here for a second before I show my tattooed chef. NBA Truckers in the house. He was the last chat winner last week. Jonathan, thank you so much for coming in. Could hear everything. Let's see what we got. Can you play it through your phone? Yeah, JJ. I know JJ holds it up. I've been going back and forth with him. He's like, Brett, because I was stressing out about all these mics and stuff. He's like, Brad, just do it how you always do it. And I'm like, I'm trying to streamline. I just bought a new desk, things like that. I really want to make this live stream really interactive and really a good thing. So that's kind of like what I'm focusing on right now, even though I spent too much time thinking about it. So if there's no questions in the chat, I don't think there is. The next thing I want to dive into is, when should you close an option for a loss? Now, this could be in the wheel, but in this case, it was a situation where I had a leaps option. I was selling the poor man's covered call. Actually, no, the poor man's covered call is later. This one is what happens when you get assigned on a cash secure put. All right, so you put a cash secure put, you put a strike, and then the stock price tanks, right? So you are left buying 100 shares at a strike price way up here, where the share price is really, really down here. And if you go to make calls at your basis now, you're kind of screwed. That's kind of what happened to me in the challenge portfolio with JJ Buckner and I. I can't believe it's been a freaking month already. A month ago, I closed. Let me share this real quick with you, and I'll show you what I'm talking about. Desktop. So here's a look at that put that I wrote last month. I can't believe it's been a freaking month. It's freaking nuts. So it might be small on the screen. I apologize. Let me see if I can make, I know I can make, oh, that's probably a little bit better. Okay. So what happened with this particular Tattoo Chef was down, and I this is what I said on that live stream or wherever I talked about this particular move. Maybe it was on the podcast when we were talking about our challenge portfolios. This was my first in the money cash secure put that I've ever written in my whole life. And with that came some associated risks. Number one, I said that I had a pretty good idea that in a month, Tattoo Chef was going to bounce back and be above 22.50. At the time, it was like 18 and change. They had a bad earnings call. Like I thought that they were going to come back. So I wrote this it was a monthly. Tattoo Chef is monthlies. So you can see right here, I collected $311 in premium for this option. So if it's $22.50, let's see what the return on investment that this was just on the premium. I got my calculator right here. 22. It was really 312, but let's put in the fees. 311.31 divided by 22.50. So in 1 month, I got 13% return on this. Okay, 13.86. So regardless of what Tattoo Chef's share price did, and this is the beauty of selling puts in a market that's a little bit down, or even just selling long-term puts like my Intel put. 6 months I wrote that put for. So right now I knew that I was going to get 14%. Like even if it goes down, it stays in the money and I get assigned, I'm going to make 14% on this investment. Who wouldn't take 14% a month? I mean, in this current market, maybe because everyone's YOLOing, but I said to myself, for 1 month, 14% of my money, I will take that all freaking day. So I put $311 in my pocket, and that happened. Then, if we look, here is the chart for Tattoo Chef. It ended the week at 1680. So I got assigned. So right now I had to buy, this is what happens when you get assigned. You have to buy 100 shares at the strike price, $22.50. So essentially, if we look now, here is let me see if I can make this bigger again. I probably should have thought about the size of screens and people probably looking on. This is a screenshot of the top one that I just did. Now here's where it says I got assigned. So minus $22.50. But what some people don't realize, so right now I say if we're going to do the wheel, right now I own 100 shares of it. I can write covered calls. And rule number 1 is that we never write covered calls lower than our basis. What's our basis? The average cost per share that we paid for those 100 shares. In this case, $22.50. So if I was going to go in and write a covered call against this now assigned Tattoo Chef position, $22.50 would have to be my minimum strike for me to quote break even. And this is a monthly, okay? But what you have to take into consideration is you've already collected. If you get assigned, you already collected that premium. This money's spent. I already bought a ton of bricks of Bud Light with that $311. Now, if you didn't spend it on Bud Light and you just had it in your buying power, well, now essentially, instead of getting assigned for $22.50, you're getting assigned $22.50 minus $311. So then we call that the adjusted basis, right? So if I say $22.50 minus $311.31 divided by 100, that means my actual cost basis on this particular move and what I would be okay selling a covered call for would be $19.38. Now there's no $19.30. There might be a $19.50, but essentially I can go in on Monday and I can start to look at covered calls. Now this is a monthly, so the next expiration is a little bit out. And I'm going to wait for Tattoo Chef to hopefully come up a little bit more closer to that $22.50. Because if I could do that, then I really keep that true $311 in premium. But if I can't, and it's getting towards the middle of the month and there's like 2 weeks till expiration, and I can get some premium for writing a call at $19.50, well, I'm going to collect premium there. So I'm going to win there. And because of the premium that I collected to make this cash secure put, I essentially can break even there. So this is kind of like a big picture thing because people treat premiums to options in all different ways, shapes, and sizes and things like that. So if you are going to think about your net adjusted cost basis, you could take your premium into account here, okay? Instead of saying that you have to write a covered call for $22.50, you can say that you're writing it for $19.50. As long as you understand that by writing that covered call at $19.50, you are eliminating the premium, that 14% gain that you made when you wrote that CSP a month. All right, so that was kind of like what happened, because this happens a lot, and it happens on the call side too, right? Sometimes we write a covered call and say the strike price is $22.50 and it shoots up to $28. Well, now you have to buy a $28 stock. You lose all of that potential. You have to sell a $28 stock for $22.50, so you lose that capital gain. This is going to happen if you are going to participate in the wheel strategy. It's as simple as that. You have to understand that and know that that's part of the associated risks that come along with doing the wheel. All right. So don't really stress out about getting like I always hear like this phrase. I'm going to make a shirt that says, what happens if the stock price tanks? What happens if it tanks, Brad? Drink a beer, calm down, and get the freak over it. Because this is a long game. And with Tattoo Chef, even with it being $18 and change, I think it's going to get up to $22.50 one day. Or I never would have even written the call to begin with. I never would have even thought about it because everything that I do cash secure puts with and everything that I do covered calls with and everything that I wheel with, I'm doing this because I want to own the stock. Back to what I just said a few minutes ago. I want to do the due diligence on the stock. So that's all I got to really say about that. Dive back in the chat and see if there's any other questions here. What's a delta you'd be looking for on that covered call. Okay, so let's talk about the Greeks quick. If you're not too sure about what the Greeks are, I did a bunch of videos on the main channel. You can go check those out. I can answer like some basic things. So like I said, anytime, guys, I'm speaking about something that you don't understand, A, I definitely did a video about it. And B, don't get frustrated, right? We come into this world not knowing anything. So everything that we hear the first time we didn't know. And you can get frustrated and say, like, this guy's always talking options. I'm here for the index funds. That's fine. And that's dandy. Or you can say, oh, wow, Brad's a pretty conservative investor and he's still dabbling in these options. Maybe they're not as risky as people say. And that's the podcast episode that comes out on Monday. JJ and I talking about how options can be conservative. They can be not as risky. And when we start talking about things like the Greeks, it's not to make things more complicated, it's to make things more simple. The more things we understand about the call, right? And the more things we understand about the put and options in general, the more things that we have in our control. I think I made the title of that Greeks video like the options cheat code. I might have changed it out once I got through the clickbait phase, but it's just a cheat code. Okay, so let's talk about right now the delta for my covered calls. When I'm wheeling, okay, when I'm selling cash or puts, when I'm selling covered calls, delta really doesn't mean that much to me now. The only thing that matters to me is my cost basis. If I am well above my cost basis, let's take, for example, VUZI. I think my cost basis or my cost per 100 shares is like $1, literally. Well, right now, even after the stock tanked, I can write calls right at the money at $14 and still kill. So I don't look at delta. I look at my basis. And I think from there, because when you get comfortable with the wheel, you love assignment. You don't fear it. You don't worry about it. If you're worried about assignment, you pick the wrong strike price or the wrong stock. With that said, if you are learning and you're still figuring out this whole feeling of assignment and that rush of assignment day coming, because as we learn more and more, we know we're never going to get to assignment any because we're going to close. But when I first did that, I looked at delta, and we look at delta in terms of the buyer. They come in a fractional amount. So it's going to be a decimal, like 0.83, 0.2, 0.17, okay? Everything less than 1. Delta can't go higher than 1. So we think about the delta as the percentage. Now, this is a rule of thumb. This is not like set in stone. We think about delta as the approximate value for the percentage that the buyer of the option is going to win. So, for example, if I look at a covered call and it has a 0.2 delta, right? We convert that 0.2 to 20%. That means the buyer had a 20% chance of this option finishing in the money and him winning or her, okay? So if they got a 20% chance, we got an 80% chance. So if you're just starting and you don't want to even worry about assignment, you just want to press the button, make your first option, collect your first premium. It's like getting your first real dividend. It's an incredible feeling. It really, really is. Then go with the low delta, 0.15, 0.2. Give yourself a good shot. Now, the premium is going to be less, but we don't give a shit about the premium. Who cares about the premium, right? So I don't care in the wheel. I just care about the basis. Now, when it comes to the covered call in the poor man's covered call, where I'm protecting a leaps option, right? When we're wheeling, I don't need to protect my 100 shares. I own them already. But in the poor man's covered call, I have that long call, right? That leaps option that I do not want to get assigned, and I do not want to exercise. And if my short covered call does, I lose that leap. So I'm going to protect that leaps. So in that case, I'm looking, I think when I first started the poor man's covered call, I was doing like a delta of like 0.2 to 0.3, maybe even 0.4, like giving myself a 60% chance. To be honest, I am not doing poor man's covered call deltas greater than 0.2, just because I've gotten myself in where I'm buying to close and trying to just recover and keep my head out of water. And that happens when I get to that 0.3, 0.4 kind of delta for the poor man's covered. So to recap, in the wheel, it's all basis. I don't really give a crap about delta, to be honest. I'm making my strike price above my cost basis. It's as simple as that. And, the further up the stock goes, the closer I'm going to get to the money, because, I could collect those premiums, and upon assignment, I'm still making a huge capital gain on that cost basis. Poor man's covered call. Currently, right now, I'm trying to stay below 0.2. Thank you so much, Dave, for the question. Nice. Yeah. I'm sorry. I'm thinking a lot. I think it's hard to understand though, because most people either get married to the stock or kind of don't care if they own it or not. Yeah. So it's like, I understand, Ron, what you're saying. So I'm saying, do your due diligence, right? And you're saying that when we're trading options, you got these people that are just YOLOing anything, trying to chase premiums, and you got people that love stocks. You do kind of have to find that middle ground. And I think when you realize that with the wheel, it's not that big of a deal. And if you get assigned, you could just, like, say you get assigned on a covered call, right? And you lose your 100 shares, just buy them right back. If you don't do the cash secure put, I mean, you might have to pay a little bit more, a little bit less, but just buy them back. And if you get assigned on a cash secure put and you don't want to hold those shares, just freaking sell them that day, right? Monday, when you get those shares, you could just sell them right back. It's not that big of a deal. So yeah, that's true. This guy's talking. Yeah, exact. People say that, Matthew. I get trolled a lot. Like, I remember when you were talking about Dave Ramsey, and I'm like, dude, that was a part of my life, right? And then I evolved out of it, right? Still talk about it, and then I got into dividend. I think I posted somewhere in my Discord, and maybe we'll get to this another. Mike, I got to go through my Discord, and I'll talk about maybe my trading philosophies and things like that. And it's what does it say? Consistency when it comes to opinions is the slow poison of intellectual thinking. Like if your opinions never change, right? Consistency with your opinions, if that never changes, you're wrong. And that's like the reason I sold my dividend stocks. Like I just evolved out of it. And some people still think that it's kind of like saying that you're a part of the FIRE community, but you still want to work after retirement. And they come after you like, you're not retired. I make a couple of videos and talk about how 96% of my portfolio is based around index funds. And they're like, oh, then why are you trolling us with these options videos? It's like, because it's fun for me. Because I love it. It's sweet. Get to a couple more questions in the chat, guys. Thank you for the questions coming in. What's the most risky trade you've ever done in the last 2 years? I got involved in the AMC GameStop debacle, and it was it was like maybe the middle of the week. So I think that stuff all happened on like a Monday, Tuesday. And then I got in the live stream with JJ, and he was cheering, and he was live streaming 8 hours a day, and he was up like 25 grand. I'm like, I need a piece of this. And I wrote in the money calls on Nokia, because they were saying Nokia was going to be the next one to go. And I bought them on Wednesday with a Friday expiration. And then they shut down trading, and we couldn't do anything. I could only close it. And at that point, the stock price tanked. I got screwed out. Let's be honest. I lost maybe, I'd have to go back and look. It was under $250. Let's call it $190. That was the most risky thing that I've ever done that way. As far as like overall, I hate to say this because I might get trolled for it. I still really believe that investing in Bitcoin is a very, very, very risky practice. And I have money in Bitcoin. So I dollar cost averaged, but as it approaches $50,000, I might be pulling some out, because the more I think about it, the more research I do, I understand that risk. So it's okay to take risks, right? Every day we take risks. It's about evaluating the risk on return, right? Like people die in car accidents, but we drive because we know that we can control a lot of those risks. And in options, there's risks too. But as long as we can control as many factors as possible and get out on the other end and know that if we got screwed, it was kind of our fault. Like that's the way I like to look at risk. Like if I get screwed, it was probably mostly my fault. And with that Nokia call, I mean, it was Robinhood's fault. It was Robinhood. I mean, the fact of the matter was I didn't do my due diligence on Nokia. I followed a bunch of YouTube live streamers and I lost $200, which I talked about in the video last week. Every single time I've listened to YouTubers and made the same things that they did without doing my due diligence, I screwed myself over. Let's see what else we got. I want to make sure that I'm good. No problem, David. No problem. For the poor man's covered call, should you make your covered call, your short call, strike price above your break even? No, you can break even, because with the poor man's covered call, you're never going to go to expiration. If you're still holding short calls and it's like 3 days till expiration, too close for my. Like you might have some sheesh in your veins, but I'm never even going to get there. It's not a big deal. By 3 days out, I've either bought to close, either at a gain or a loss, and we'll get through one of my losses. That was a question inside the video that I posted this week. So we'll talk about when I bought for a loss. We'll get to that in just a second, guys, as soon as we get through here. I'm actually pretty willing to do a poor man covered call under my break even. I'm going to stop reading right there. That's for you, man. Good for you. Do you. I'm not going to criticize. I'm not here to judge. You can make your short call below your leap strike. I don't care. If it works for you, it works for you. I know many people that do these things and make a lot. I know people that trade in the money calls and make a ton of money. I clap for you. I'll watch from the sideline. It's the same reason I don't skydive. It's not for me. Like, if you want to jump out of a plane, looks dope. Looks mad fun. Not for me. I'll sit on the sideline. So if you want to do your short calls under your break even, I like putting myself in a position where I'm at least gonna break. Right? That's just how I feel. Then again, I'm old. Is that why you were so pure of your wheel money? What do you mean? I stopped doing the wheel because I just got into poor man's cover calls. All right, so before I talk about this video mistake that I made from this one, I just want a couple announcements. JJ Buckner's coming to town. Like Santa Claus is coming to town. JJ Buckner's coming to town. Let's take a look at the Robinhood portfolio real quick. It's top. I'll show you what's going on in there. Let me move mine. Let's look over here. Sorry if you're on a phone and you really can't see it. So right now we're talking about like this week to come. I have 1, 2, 3, 4, 5, 6 leaps options still open. This week I was able to get in a waste management. Let's see what I got that for. I got $65, 65 US dollars for that call. And then Pepsi, I was also able to get into that. I got $26 for that. So we will wait and see on Tattoo Chef. That needs to come up a little bit. Vuzi, to be honest, like I said, my break even so low, I could write it. But I have 3-4 weeks before my next expiration date. So I'm just going to hold Tattoo Chef and Vuzi for a couple weeks. If this was a weekly, right? If Vuzi had weekly calls, I'd sell a call. Or Tuesday. When the next day they were green, I'd sell a call and get a little bit of money. But I'm not going to do that now because I want to wait because I think it'll come back up a bit higher. This was a bet. You know, I actually was talking to this kid today. I was like, I got to get rid of this. Every time I scroll down, I look at Dogecoin. I'm like, the watch list, guys. I have a couple things on the watch list as far as like things I'm going to be looking for value puts, as well as leaps options as well. I can kind of go through those. If we look at Dick's Sporting Goods, they're kind of going to be like a value put play for me. I've been reading the little book that beats the market as recommended by Everything Money, that channel. Those guys are great. I've been reading that book and getting more into like looking at value plays and how we can use puts and value stocks to really, really make a ton of money. And Dick's is one of those stocks. These are just stocks I'm going to be doing some due diligence on this week. HPQ, which is really just HP. That's going to be a put value move. ABBV, and we're going to talk about ABBV in a second. I'm kind of mad I got out of ABBV. I didn't do enough due diligence the first time when I got into ABBV, and I wish I would have held them. I ended up closing that leaps option early, as we saw in that video I posted the other day. Visa, I'm just always watching Visa. I always want to know what they're doing. Lowe's and Home Depot, those would both be leaps. Poor man's covered call kind of moves for me. I do not think they're at a great value. I cannot afford to write puts on them. I don't have that type of money. But if things were to correct a little bit and come back down, I might look at, Home Depot and Lowe's as maybe a poor man's covered call kind of move. Apple, I always just have in here. Intel, this is because I already have puts on it. AMC, I just like to troll on AMC and see what they're doing just so I feel like I'm in the news. These, and then the rest of these are the ones that I currently have contracts open, just so when I'm up here looking at my options, I can scroll down real fast and I can just get to, the share prices and just kind of see where I'm at. I do not monitor my buys that much because they're so far out till expiration. I really only monitor my short calls. So right now I'm not doing that much scrolling because I don't really care. I'll kind of like, I'll look at this and be like, oh, I need to make a Starbucks call. Is Starbucks green today? Oh, they're green by how much? It's kind of flat. So that's kind of how I look at that and kind of play that out in my mind. Did everyone finish their beer? Let me go back. Screen here. Green. 32 people in here, guys. Thanks so much if this video is helping. Every single week, the views have been going up. I think we got like 800 views on last Sunday's video, which is awesome. Was not able to go live during the week. I apologize for that. This week's probably looking more of the same because JJ and I go live Wednesday, every single Wednesday for shit, it feels like 3-4 hours sometimes for average money. So we do that on Wednesdays. And then he's coming to town. So we'll see what happens. And he's bringing his wife. We're going to go into New York City and do it right. And for all the people that were there for average money last week, our group ran 75 miles this week. I think amongst like 15 people. Absolutely incredible. My worst was buying 200 shares of a SPAC. I hear SPAC now, and I still just run. Somebody was asking me about a company the other day in the Discord, and I was like, oh, that does sound right. The numbers sound right. And then I see they were required to have a SPAC, and I'm like, On beer number 2, let's go. Got my root beer. I'm a Utah guy. That's fine. I wish I was there. And Utah's a beautiful place. I would probably trade like being a part of that community in Utah and being an outdoorsman. Like one of the most beautiful. I can't even say it. It's the most beautiful. Utah's the most beautiful state in the nation. Has literally everything. So I would probably, if you said I'm going to put you up in a house and you won't have any mortgage and you're financially independent, I would move. I don't know if I'd go to like the Moab side or if I'd stay on this side and stay like by Zion and Bryce and all that. I hate that they're so far, but I love it. I really do. Baja. Is that the like Mountain Dew that's like blue? All right, so let's look at this ABBV move real quick. Gotta move this over here. Screen, because I'm using 2 screens. Talked me into it. I talked JJ into trading the wheel. JJ talked me into getting another screen. So I don't know if you saw my video this week. I assume you did. Maybe you didn't yet. Maybe it's on your to-do list. But essentially I went through all of my 300 or so option plays, and there was one, I got a question on it, and he's pretty much questioning one of the moves that I did, which is awesome. I love that, guys. There's a big difference between like criticizing the things I do and being like, hey man, like what happened there, you know, or like, why did you do that? So Chris right here, and I'll summarize it because it's a little TRDL, but pretty much said I made an ABBV short call that I placed on this date, and he gave the timestamp. So if you can go to that video, 7:04, but I'm going to answer it. He's wondering why I bought to close with a loss of 112, being that the strike price on expiration day, the day that I did close, was at 108 or really 109. And then he just kind of asked, like, why would I do that? And I completely, when I saw that I took that big of a loss on an expiration that was way not even close to this, I'm like, that doesn't really make sense to me. So I dove in and I kind of looked, and let me show you what he was talking about first. I screenshotted so we can like reference what he was actually talking. This is a screenshot from that video. And what I did was I sorted all my plays just so everyone could see them. Once again, guys, I apologize if this is like small, if you're like watching on a phone or something, I apologize. But I'm going to like talk through what we're looking at as well, so we don't need to get all freaking crazy. Oh my God, why? It's so small. But he's talking about this call right down here, 326, and then this 12. And then I saw these and I'm like, oh man, I made a typo. And that totally happens. But I did sell it for a loss, right? We have this 138 here, this $38. So I opened it for 30. I sold it for 68. I'm not sure where he exactly got that I took a $112 loss, but I knew between this and knowing that I closed and then opened one immediately after, on 4-1, I knew that I'd made a mistake. So I'm just going to clear that up real quick. I went back and I looked and I tried to find I went back to my options chain. It was like, okay, what did I do wrong here? What I did wrong was I had a typo in the fact that it should have looked like this. It was a $107 strike price. So I don't even know how the hell that happened where I put in 12. I was probably rushing, whatever. And that makes a little more sense, right? Because it was at $108 that day. So this was closed at 9:30 in the morning. So I woke up, saw that it was above, was like, crap, I'm going to lose. So I better get out and get out quick. And like I just mentioned before, when I'm doing the wheel, I never would buy to close. I very rarely do because I don't fear assignment. But for this, I needed to protect this ABBV call. I do not want this to get exercised. I do not want to be forced to exercise if this short call. These are all the short calls on this poor man's covered call. So why did I do that? Well, I took the loss to protect this. Now, generally what I would do is I would try and roll up and out. I did not do that here because for one reason or another, this was me getting out of this play, right? I did not want the ABBV or whatever, so I sold it. I got out on 4-1, and then I opened another one. I got $22. So essentially, I really only lost 18. That went here, and then for whatever reason, ABBV was gone. So this is a bad example of when I will buy to close at a loss, but I just wanted to show that in the video and thank Chris for pointing that out. And if you ever see something that does not look right, like I said, there's a difference between criticizing what I do and just questioning it. Being like, that, can you please reiterate what you just said or talk your way through what you just said? But I will give you an example of when we are going to buy to close at a loss. And that happened, it happens all the time, but here's a situation. I'll try and make this as big as I can. So this was an Apple play, and this was a part of a poor man's covered call as well. And we can see that I opened this Apple right away. So I opened it on 2.5 and I paid this amount. Great. I immediately bought a call at a strike of 141. And I think, let me get the day that I closed that because it's really, really important. The day that I closed. Because I have a feeling and I think I closed it the same day. Like I rushed into it. I was so excited. I was like, oh my God, I'm the coolest kid ever. I just got my first leaps. Yeah, here we go. I'm the coolest kid ever. I just opened my leaps option. I'm going to do a poor man's covered call. It's February. Can't wait to tell my Discord members about it because I'm the coolest kid in the world, right? So I got it on 2.5. I opened this and then boom, on 2.5, it started to skyrocket. And I was like, shooting 2 makes 8. So essentially that same day, I closed this for a $2 loss, right? Now it's only $2. I've taken much, much, much bigger hits than that, okay? But it's okay. When you are doing the wheel strategy, well, not so much the wheel strategy because we're going to get assigned, not a big deal. When you're doing the poor man's covered call, you need to be able to buy to close at a loss because it's not about this one call. It's not about this sell to call. The sell to call means nothing, okay? Because if you look what happened, that same day, I closed on 2.5 over here. The same exact day, I opened another one with a $6 strike higher, $600 difference, okay? It was only $15. You're like, oh, that's only $15. Like, who cares? But the main thing that $15 did is it offset this $2 loss. So instantly, by making 2 trades, I was really up $13, right? I wasn't down $2. You can't look at it as one buy to close for a loss. You have to look at what that roll is going to be. Now, this particular roll was just up, right? We talk about up or down in strike and out in expiration. So it was only 2.5. I still had expiration of 2.12. So I was like, okay, cool. So I only rolled up, but not out. So I essentially got the same expiration, okay? And I got a $600 difference in strike, but it cut down my premium a little bit. But we can see a couple days later, 2 days later, 3 days later, I closed this. And I closed this for a gain. On that same exact day, I stayed at the same strike price and now went out. So now I've gone up and out in essentially 5 days. Okay. This one, I got $28. Boom. I closed this on the 10th and I did another 10. This one was the same expiration. And like I said, I just kind of seen what was going on. And this was really 2.5. This is when I was learning. I first started doing the poor man's covered call in early January, mid-January. This was probably the third one that I opened. All right. So this is an example of me learning and not being 100% efficient. But at the end of the day, this is the point that I want to make and why you'll buy to close. The $2 means nothing because sometimes you're going to buy to close for $100 loss. Okay. It's all about the subsequent moves that you do after and how you roll up and out in expiration to offset the loss of that buy to close. You feel me? So we see that from 2.5 until 2.11, right? I made 18 and then 20. I made $25, right? I knew I was never going to make 61. I knew I was going to buy to close that at 40% or so. I'm buying to close at 40%, essentially $25. So instead of getting that $25 by 212, I got to buy 219 another week. But from 2.5 to 2.11 in 6 days on this, I made $25. That's okay with me, right? So I guess the point that I'm trying to make, and if you're going to be doing poor man's covered calls, this is something that you really, it's so hard sometimes to buy at a loss. You have to do it sometimes. You must protect that long call. You have to do it, right? If you don't, then you are going to lose money. We know that when you exercise a buy option early, you lose money to extrinsic value. If you do not know, go over to the main channel, type in Brad Finn closing options or Brad Finn stop setting money on fire or Brad Finn exercising options earlier. I made a ton of videos about it. I think the stop setting money on fire is probably the best one of why you never want to exercise a buy option early. Ever. Okay? So please, guys, know how to buy to close if you are going to trade the poor man's covered call. If you don't have it in you yet, emotionally, to buy to close at a loss, stick with the wheel. Because I get that too, right? Learn how to get a sign in the wheel. See what that feels like. Like, oh, yep, I'm going to get a sign. No big deal. Then you can start to think about, what's going to go on further down the line when we start doing poor man's covered call. Because like I said, this was a $2 hit. I think I could probably look, but there's definitely some Vuzi ones. Like 1 week, Vuzi went up like 18% in a week. And I was like, I had to protect my $5 call option. And this was when it was like $30. I got slapped in the face on that Vuzi play. But at the end of the day, I really won. Because I looked at the whole buy, and that's the thing I talked about in the video. If you didn't look at the video, please. If you're trading the poor man's cover call, please. I'm not promoting myself, but I am. I'm promoting it for your benefit if you want to do this. You have to look at the major body of work. You need to see everything to understand like why, right? Now let's get into the questions. We got a couple more questions. I got one more beer. Bang out this beer. I love it. Thank you so much for the questions. Please leave a voicemail if you have one. Like I said, if we get a voicemail, I'll go live tomorrow. What's today, Sunday? Yeah, my last Sunday of summer, right? How often do you find that your 0.25 buy to close order that you place for a profit is filled? Because I still feel like I have to watch my buy to close and sell again. Okay. So when buying to close, and this is for opening as well, and this has nothing to do with Robinhood or Fidelity or Schwab or whatever, right? You have your bid-ask spread. If your bid-ask spread is not tight, it's going to be hard. Now, personally, for me, I account for that bid-ask spread when I open the contract. When I open that covered call, because I know that the bid-ask spread isn't going to change that much, right? So oftentimes, right, when we are going to be the buyer of an option, we have to go up to the ask price. When we sell a covered call, we have to go down to the bid price. So if I want a covered call done quickly, screw it. I'll just go down. And I'll just write it at the bid price. Doesn't happen very often when I do calls because I'm doing this with stocks that have a pretty high liquidity. And I'm also not going that crazy when it comes to my dates to expiration. To buy to close, I usually would just go right up to the ask price, to be honest, just to get it done with. Because if I'm buying to close, there's a reason. I'm either shit up creek without a paddle and I want to get out of there, I'm going right to the ask. I want it fulfilled. When I'm closing, I don't have time to go at the mid price and be like, maybe. Now if it's a really, really wide bid ask and maybe you just want to go a little above the mid, maybe you got 10, 15 minutes that you can watch and maybe you want to creep and start at the mid, close that out, cancel that order, go 5 cents above the mid, go 10 cents as you work your way up to the ask. If you got time to do that shit, do it. But for me, I'm not going to lie, 9 times out of 10, I'm going to give up the $5, $10, especially in the poor man's covered call. In the wheel, you don't want to be giving up $5, $10 every time because, that's going to cut into your premiums. But I'll give that money up in a poor man's covered call because my gains over long term, it's kind of like nickel and diming. And I don't have the time to sit and wait at the mid price and then go above and above and above. I don't have the time for that. If I did, then I will. But generally, like I said, I want to close. I want to close and I want to close now. Open, I could screw around with that. I'll go to the mid price when I open, see what happens, go back in a half hour, see if I get that notification on my phone, see what happens. But I think it's to close, not worth it for me. Get out, go close to the ask price when you're the buyer and get yourself out of it. My summer is over. Sure is. And you want to know what? I hate to sound like that teacher, but I'm ready to go back. I'm always ready to go back at this time. I'm actually really, really excited JJ's coming. He's coming at like the perfect time because it's so hard to say, but it's like there's only so many days in a row that you can party your ass off before you just feel like a complete degenerate, before there's no structure in your life. I literally don't know what day it is, what time it is. That's why my videos have been posted all over the place. I don't have a schedule. Like, can't wait to get back to work and have like a structure. I can't wait to also have some time away from my kids and edit, have my own private place to edit in my office. I have my own office. Like, I can't wait to go. And I also love teaching, man. I love the kids. Just found out I'm going to have all my kids back in my classroom again. We're all going to be in masks, which is totally cool with me. No virtual. I mean, and then too, when you're in a highly Jewish district, I'm in a huge melting pot district. I don't think I have a full week until October. Because with all the Jewish holidays, I think Yom Kippur, we got Labor Day. I think Rosh Hashanah is on a weekend this year, but we have all these holidays. So the fall goes so fast. And if you live in a place that has heat and humidity, and that's pretty much what every single place, is there anywhere in the country right now that does not have humidity or heat and humidity in the summer? Like, I have heat and humidity. If you are not at this point of summer getting ready to put on a hoodie or strap on a flannel, you're a crazy person to me. I cannot wait. JJ does his videos. It's flannel season, baby. I cannot wait. We had like a 68-degree day a couple weeks back. Hey, thanks for subscribing to the channel. A couple weeks back, and I said to Tara, I'm gonna put a hoodie on. What's up, Jason? I said I'm gonna put a hoodie on. It wasn't time, but yeah, man, I'm just so excited to like get a hoodie on. I'm excited for football, even though I don't care about sports. I love a reason to drink on Sundays. I just love everything fall, and so summer's over, but summer needs to go, right? That's why we appreciate summer, because it goes and we have winter. Guys, I'm just truly blessed. I was supposed to get punched in the throat by a hurricane last night, and then it freaking zagged. It like karate chopped and zagged, and I just got a bunch of rain today. So I'm glad the lights were on. I was going to go live last night because everyone was telling me there is no chance. There's no freaking way that I'm going to have power tomorrow. So I was going to go live last night, and then not going to lie, I had a couple cocktails. I was like, you going to go live? I'm like, no shape to appear in front of other people besides my very, very close friends. So I opted out of that, and yeah, so here we are. And yeah, things are good on the New York front, and I'm really, really excited. Every time JJ's in town, it's weird having like a best friend from the internet, So when he comes, and he was just here like 3 weeks ago, and he's bringing his wife. I cannot freaking wait. It's always good to have your boys around, but we always just have a good time. We get a lot of work done. This is like the power of having like-minded people. Like when JJ comes, we don't just rage. I mean, we rage, But we get so much freaking work done, and we are so efficient, and we better our financial futures. We just better ourselves in 100 different ways. And that's really the reason why I love having him come, and him and all my other friends as well too. I was on my boat daily in the summer. I love summers. Yeah, but if you're a fisherman, screw summer. Fluking sucks. I mean, weak fish taste good, but fluke, who wants to fillet fluke? Cannot wait for the full bass. Let's go bass. Elementary PE teacher in Indiana. We got masks. We got masks on, but kids don't. Okay. Wow. Cool. Going into my 4th week tomorrow. Yeah, some people I feel like we're one of the later. When I taught in Arizona, we went back to work early August. I don't know if I like it better or worse. I like having Labor Day. It's kind of like a good starting spot, and it's so funny too. Talking to my friends that aren't teachers, like my New Year's is Labor Day. Like all my year goals and everything, they are according to the school year. So like I'm getting ready for my new year. I got all my like yearly goals. I'm seeing if I got them all set. So yeah, but good for you. I mean, if you don't mind me asking, Bryce, can I ask what your salary is, how long you've been working, and what your education is? I'm always just curious to hear like what teachers in other places in the country, because every time I post a video about it, I just get freaking yelled at. Crazy 90, crazy humidity. Yeah, man, you want some cool weather. Top 10 companies that sell flannel and hoodies for serious profit. I mean, we're going to have some average money hoodies coming up. Oh, man. Not you, yeah. Last night was not a beer night. Beer nights are for the weekday. Friday and Saturdays are for the bourbon. Tequila if we're drinking margaritas, but yeah, no, Fridays and Saturdays are strictly bourbon night. Looking to do some substitute teaching. Teaching's the best. It's a shame that people don't get paid what they should get paid, but it's the best, especially if you want to be in a, I'm never gonna miss a Christmas dinner. I'm never gonna miss any holiday. I'm never gonna miss 4th of July. I'm never gonna miss a holiday with my kids. That's something great. 41K starting 3rd year, but only 25. So living at home so I can rest. Yeah, buddy. Oh yeah. And that's a good mindset. I started in Arizona. I was making, I think the biweekly paychecks came to like $500. I don't know what the salary was. It was about 30,000. And looking back when I talk about that, everyone's like, "How did you live like that? How did you live like that?" And I'm like, "Yeah, JJ, 3 days. Let's go, buddy." I'm like, I live like that because that's all I knew. To be honest, that $30,000 first salary that I had was much more than I had working in a pizzeria. So it was an upgrade for me. And like you just mentioned, living at home, my living expenses were like 10. So I netted like 20K when I was making 30. But, now it's come out to New York. I think when JJ comes out, we actually have to plan a run now. Maybe we'll plan a group run for all the Long Islanders. JJ and I are going into Manhattan Friday night. So we'll be doing happy hour on Friday, showing him and his lady. We're going to do all the touristy things in New York City. Going to be nice. I think we're doing the beach on Thursday. Definitely stop by Dubco, have a couple beers. But yeah, if you're ever in town, come on. Meet up in New York City. I would love to get that done. And then JJ, we have so many other things that we need to plan. We need to plan a run when we go to Austin in a couple weeks, right? FinCon. I know there's going to be some people. We're going to have to show up with our fit running bodies and make sure that we're good to go. I wonder what JJ's drinking tonight. He's a vodka guy. All right, guys, at the risk of saying that I would never just babble on and stay on forever, I think we got a lot of stuff accomplished, guys. Thank you so much for the questions. If you have a last-minute question, we'll do that before we get to the winner without a prize last chat for the night. Salt Lake City. If I'm ever in the Salt Lake, anywhere I travel, guys, I will say I'm going to meet up. The last time I traveled, I went to Colorado, and I was talking to a guy, and he's like, "Hey, I got this event tonight with a bunch of financial people. Want to come?" And I was like, "Hell yeah!" And it was at Mr. Money Mustache headquarters. So, I mean, every time I travel, I try and meet up with as many people as I can, because just like I mentioned, having a best friend that doesn't even live in the same state as me, that I just met for the first time a year ago in person, I have no problem like going places and meeting new people. I understand that I still probably have another 25 best friends to meet all over the country somewhere. if I was going to day trade, what would I use? I'd probably use I don't know, probably hard to say because I am kind of talking out my ass a little bit. But the one that I know I'm comfortable with is Thinkorswim. That's probably where I'd go. We just started a day trading like chats inside the Discord because I finally like put my ego aside, said I could be vulnerable and say I really don't know what the hell I'm talking about, because every time I talk about like bettering yourself, I talk about being okay to be vulnerable, but for whatever reason I haven't had a day trading chat in my Discord because my ego wouldn't let me. So I'm going to be learning a lot more about that, and I think that's kind of where I'd go. But really, I'm talking about my butt. Don't really know. How do you feel about doing poor man's covered calls with ETFs? Guys, thank you so much for the questions. I will stay in here for as long as we have questions. I have no problem doing the poor man's covered call with ETFs. The thing is, because their volatility is low, right? Because they follow indexes, depending on the ETF, obviously. Their volatility is low, so their premiums are going to be low as well, because that's a factor that, you know, the value of an option is its intrinsic value and its extrinsic value. The big one being extrinsic value, that time decay and implied volatility, those two things working together. So when you have that ETF, you know, there's not a lot of implied volatility. So a lot of the time, it's not really worth it. And I'll give you an example. Everyone talks about the SPY wheel. They have options every 3 days. It's like the holy grail of the wheel. And I fell into it. And then when I finally had the 40K, I finally had the money, and I was like, I'm going to do the SPY wheel because I am the coolest man in the world. I don't know if I have a Discord chat. You know, I need the SPY wheel. I'm going to make a YouTube video. It's going to be dope. And then I like looked at it, and the returns weren't good. Like, I looked at the premiums. I kind of like saw like what I was going to do. And everything is about like that return on investment. I'm like, I'm going to be putting in 40K to make as much in premium as I could with, you know, investing 10K. So I didn't do it. And I think the large part of that, and SPY actually has a high volatility when it comes to ETFs, especially those broad-based indexes. So I'm not against it. I'm more a fan of wheeling them, I think. You know, like I have hundreds of shares of VTI. I'll wheel the shit out of those. I don't care about that. But I don't think I'm ever going to really, because ETFs are like my long-term holdings. Maybe that's another thing too. Like my ego is like, if I'm gonna trade options with all the risky YOLO young kids, I want to use risky YOLO stocks too. And if I'm an index fund investor and I come on and talk about how my whole retirement, 96% of my net worth is in index funds, and then I'm like, but don't worry, I trade options with ETFs as well. Like, I don't know, it would just make me feel like a loser. And deep down inside, I'm self-conscious about being the loser. So, long story short, if that's what you want to buy and do them with, go for it. If you would have started a poor man's covered call with SPY 7 months ago, you'd be raking right now. So I'm not going to lie. That's fine. I have no problem doing it. It probably wouldn't be a great idea to do something with a ton of dividends, right? If we want dividends, we're not going to really trade poor man's covered calls with dividend stocks because we're not going to get the dividends. And if you're not going to get the dividends and it's a dividend stock and that's the benefit of owning that stock, then you probably shouldn't call that. But yeah, that's how it is. To be honest, once again, Anton, I don't know anything about it. Be completely lying, and I'd rather just be like, sorry, dude, can't help you, than just lie to you or pretend like I know. The only people I pretend like I know is high school students when they ask me a tricky AP physics question and I hadn't looked it up in a while and I don't want to look like a dope, and then I say something like, that's a great question. We're actually going to be working towards that later this week, or that's an absolute great question. Maybe you should do some side work and maybe I'll give you some extra credit in the next one. Yeah, it's all about return on capital, right? Like if you're selling a put, and I'll leave you guys with this. If you're going to sell a cash or put, you have to put up collateral, right? Take that collateral, right? Divide it by how much money you just put, take that premium, divide it by how much collateral you did, multiply by 100. Look at what the return on that investment is. Simple as that, right? If it's 10% for 6 months, that's a 20% annualized return. You should probably make that cash or put. So many people are so worried about tying up that collateral for so long. You need the collateral back, just buy the clothes. Get the hell out of there. All right, guys, that's going to be it for tonight. Leave a voicemail. It's linked inside the comments and in the description as well. I get a couple of voicemails. We'll go on tonight. If I don't see you, I'll go on tomorrow. If I don't see you tomorrow, get on Average Money Podcast. JJ and I will be live on Wednesday, usually about 8 p.m. Eastern Standard Time, doing inappropriate things with alcohol, but just having a grand old time. And until the next one, guys, take care.